Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So here market behaves accurately with our trading plan. So action to the upside is continuing. Recently and yesterday we talked about breakout of this top and was confidence area, and we said that some minor retracement was due incident in the Red Sea, but as soon as everything has been fixed, I mean internet connection, so we can see that everything returns back where it should be, and market has shown this upward breakout that we have suggested and stands right now above this area. This performance we see not only on euro currency, but corresponding performance you could see on the gold market, on a dollar index, and even on a 10-year yield. So if I will show you dollar index, here's obviously we're dealing with this ABCD pattern to the downside. This target stands somewhere in an area of 1 or 275. Say BCD extension based on the hand shorts that we have here, the same pattern we have on the fall time frame chart on the euro currency. We're talking about it already for a few weeks. On a 10-year yield, you can see that yield is dropping, guys, and this also provide some bearish background for the dollar itself. And one thing that's becoming very interesting is that we are starting to identify the additional driving factor that actually was not able to foresee earlier. And based on analysis of the headlines that we see on the statements of the big banks, it seems that investors and even politicians are really scared with the size of the United States debt. Yes, of course, it's not a new topic, so everybody knows about that. But the recent degree of the increasing of this debt is the 1 trillion per 3 months. It's really outstanding and it's really scary, and nobody were prepared to that. Especially it was some forecasted that actually budget deficit should be decreased, and total deficit will be not a significant debt accumulation, also should be a bit lower, and in the recent few months it's taken really scaring value. And we suggest that in the current rally that we see on the euro currency and other markets, this is some degree of this factor. So investors right now starts to see two currencies not in comparison of the actually the strength of the economy, United States, European Union, and not even in terms of the rate parity. So that's who will first cut the rate, but in actually in the safety and stability of the currency, because obviously in the European Union the debt level is significantly lower, despite that the economy is weak. But as a reserve currency, euro currency might be looking better than the United States, when actually with this new issue that I have just described, it's some doubts already exist concerning the reliability on the United States dollar and how it could be used as a reserve currency and so on. This trend is just appeared. This driving factor is just appeared, and we need some time to check this moment. But I start suspects that really could become one of the major driving factors very soon, depending what we will see on the dynamic on the budget deficit in the United States and some other statistics. As worse situation in the economy will become United States, as more this driving factor will get value. So let's keep watching, and we will talk in details about the subject in the weekly report. But I start thinking that well, actually it might be really important. Speaking about the short-term perspective, so everything goes as we actually suggested. Bullish context is valid. Market right now hits next resistance area 109.15, which is the 50%. Don't forget that the 50% level is a favorite level for euro currency. Here actually today we will see, maybe we will get some balance, especially because today we also will get European Central Bank meeting. If no new comments will be, or even some minor dovish comments will be, it could trigger some pullback here on euro currency. We'll see. On the 4-hour time frame chart, market also hits the COP target. After the COP, we do not expect normally deep retracement. So usually 30% retracement might be even from this upper direction or from that upper direction. It should not be too strong. It will be perfect if market will be able to stay somewhere above this trend line, which is a neckline here on the hand shoulders. That will be perfect scenario. That's why I think that we need to consider the first two levels that stand somewhere around this area. Next target is OP, the same as on dollar index. It stands around 109.88, almost 110. Recall our discussion, guys. I already talked about this when we start talking about what the particular factor could push euro back to the 110 to give us big head and shoulders patching here. Here's what we see actually changing in our right before our eyes, and actually the situation is changing and market is keep going. And now is appearing the question even whether this head and shoulders will fail or not. So it's also very important, but we probably will consider this already on the next few weeks. On the hourly chart, here we have nicely looking thrusting action. In general, I would first consider these levels, 108.86 and 108.70. This more important just because this is confluence, and actually this is right around the same trend line that we have just described right there. So it's probably this will be a primary area to watch for, especially with the European Central Bank meeting ahead. Volatility probably might be a bit great, and from that standpoint this level also seems more interesting, where we could consider another possible taking the long position on the euro. So let's keep watching and see what will happen.